All right, so pretty great start to this week. Okay, and honestly, it was very straightforward from a technical analysis standpoint. Okay, I covered this in the weekend newsletter. We'll go over the notes. If you need to pause and read the notes, do so. Okay, but from a technical standpoint, it was very, very clear on what we were looking for. Okay, so let's go ahead and review. It's Monday. It's 12:04 p.m. Pacific time. We got about 55 minutes left of market, but we'll go ahead. We'll review what we had on the weekend newsletter, how that played out from Sunday into Monday, and then what we're looking for heading into Tuesday. I'll get into it a little bit, and then I'll send a newsletter looking like around 2 p.m. Pacific. So let's go ahead and let's dive in. So first things first, okay. The first range of focus I set down in that weekend newsletter was pulled from the 4-hour time frame, and that was set from, the pivots are set from 67.18. I was just sticking with 67.15 because it was basically the previous week low, and 6900. Okay, this was the 4-hour time frame right here that the market was stuck in. Okay, so the outlook is that, every time frame, the market's doing something different. Okay, in the 15-minute time frame, we can have a range, but the market can be breaking out of that small range, and that puts the 15-minute time frame in trending mode. Okay, now as we zoom out into these bigger time frames, the ranges get bigger, and that's what we want to pay attention to, because we want to know where the market's at. Is it in the upper part of the range, lower part of the range? It helps us kind of get an idea of what we're looking at heading into the session. So yeah, the market was stuck inside of this 4-hour range. Okay, and as long as the market's stuck in here, it shows us that the market in the 4-hour time frame is in a consolidation state. And to trigger any big move, the market needs to break out of this range. Okay, so in the weekend newsletter, I had set down that sellers were in control of the market because we were in the lower end of this 4-hour range. Now, being in the lower end of the 4-hour range, the pressure is on sellers. Okay, they drove the market down to this lower extreme, this lower end. Okay, so pressure is on sellers now. Like, if you want to see any further downside development, you have to trigger a breakdown out of this range. Okay? And that's where the strength, is dictated. Can sellers trigger a breakdown out of this range? And any failure to do so, it just keeps the markets trading in this 4-hour time frame range, and that's where we have the opportunity to get long at the lower end. It's very simple. It is that simple. Okay, so opening up Sunday's future, sellers triggered a breakdown. They triggered a breakdown because the market gapped under this range, and sellers were able to follow through on that on an intraday view. Okay, but as I explained to readers, a good successful breakdown of this area would ultimately lead the market to our buy zone, a very high conviction zone for buyers. Okay, so if we zoom out real quick, okay, this is a very high conviction zone. Okay, the market was stuck inside of this 4-hour range. If you like to short at the extreme lows, that is a tough trade. That's a trade that I typically do not do, okay, because 9 out of 10 times you're going to get trapped, especially on these bigger time frames. Okay, I don't do those type of trades. Okay, but the most important thing to understand here was that breaking under this range and sellers were able to follow through, it would just put expansion, setting up the market to fully test a buy zone down here. Buy zone that the market was the last time the market tested this zone was in November 2025. Okay, and before that, it was in early October. It's third time into this zone. Okay, and as I always say on the newsletters, price has memory, whether it is at a resistance area or whether it is at an area where buyers stepped in. Okay, price has memory to very big reactions. Okay, so when the market tested this area, it was a breakout area. The market tested this area in October. That was a pretty big significant reaction. When the market tested this area in November, there was a pretty big reaction to price. Okay, so getting into this area, knowing that there has been significant reactions in this part of the market, not to the downside, but to the upside, it's something for us to monitor. It's something for us to be interested in. Okay, and I don't use the RSI only specifically on the 4-hour because that's the best. It's a really good time frame to tell on oversold conditions, just because I'm day trading. I'm not looking long term and all that stuff. I take it one session at a time. Okay, but breaking down out of this range, as I mentioned, it set up expansion into this buy zone. We dipped inside of this buy zone. Okay, and at the same time, we have the RSI giving us, an 8 down here. Okay, extremely oversold into a buy zone. And what happened is dipping inside of here, okay, is really good because these setups play out a lot. So, we learned something today. Okay, dipping inside of this zone, okay, the market dipped into it. It was instantly met with buying pressure, pushing the market right back out. Okay, so it's just trading 101. The market moves through liquidity. That's all it does. It just ping pongs back and forth looking for liquidity. Okay, and from this breakdown, it set up the market to test this buy zone. Sellers tested and the market tested inside of here and picked up demand, and that pushed us right back into the breakdown level. Okay, so that was a very high conviction zone that I was looking to take the risk. Okay, and let me pull up the notes. Where is it? Oh, my bad. There we go. Okay, so pause, read the notes, but it was pretty straightforward right here. If sellers manage to break down 67.15, let's pray that continuation can set off into our bigger home base area at 66.21 and to 65.81. This is an area that I'm highly interested to put long exposure into work. I rarely like to catch falling knives type of trades, but this is an area I'm willing to take risk. So, yeah, very straightforward. We got the breakdown out of this range, but it's important to understand where is it leading the markets. Okay, it led us into a demand zone. We picked up liquidity. We were completely in oversold conditions. It was a no-brainer. Okay, so let's take a look at on an intraday view. Okay, so yeah, I took a pretty quick long at 65.92. But let me pull up the notes. Where is it? Notes. All right, let me slide this over here so you can see. Intraday. All right, right here. So, my bad. Scrolling right here. So, it's very straightforward. I mentioned in the intraday commentary, I'm taking a shot down here on some long exposure, averaging 65.92, running a normal stop of 15 points. I mentioned that if you want to wait for a better intraday signal, watch for a reclaim above 66.12 to signal longs targeting 66.21, 66.36, 66.46. So, yeah, here's 66.12. Okay, so on that gap down, the market set a pivot down here on the 15-minute time frame. Sellers followed through on that, attempting to trigger continuation, but as we know, we're pushing into the lower end of that buy zone. Buyers immediately stepped in and put the market back over the most recent short pivot that triggered, and this was 66.12. So getting back over 66.12, this was a long entry that was given. Okay, we worked back up, the market pushed, and heading into Monday's cash open. Okay, if those entries were missed, we did do some adjustments. So right here, ES is currently maintaining within 66.60 into 67.01. So here's the pivots right here where my crosshairs are at. I got 67.01. Right here is 66.60. Okay, so from gapping down, testing the buy zone, reclaiming 66.12, the market rallied almost 100 points into the upside from 66.12, and the market began consolidating within this intraday time frame range. Okay, let me pull it up. Oh, no, this one. All right. Yeah, the market began consolidating heading into Monday's cash open from 66.60 into 67.01. Okay, so the outlook was set that, hey, if buyers can maintain the market inside of this range, it shows us that they're holding on to the overnight strength. Okay, and that gives us opportunity to participate on the long side and to look for continuation. Okay, so I gave a trigger, another one that I was able to take myself as well. I put that intraday support is set at 66.60, which is the first area to look for potential traps to participate into this overnight move if bulls can maintain. Okay, so what that means is, we want to see if the market can maintain that strength, that overnight strength. Okay, that's our outlook. Can it maintain it? And the big clue of the market maintaining that strength is holding inside of this range. Now, what is our signal? Well, sellers cracked 66.60, okay, and attempting to break this intraday range down. Okay, so breaking the breakdown of this range, it tells us that, hey, Sellers are attempting to negate this strength, and that's what we want to look at. Okay, so sellers broke the market out of this range, but they failed to maintain. Buyers stepped in and pushed the market back over and inside of this intraday range. What does that tell us? It tells us that what we were first focused on, buyers are maintaining that overnight strength, and this offered opportunity to get long. If you missed, buying the dip inside of the zone, if you missed 66.12 at the cash open, we had a long entry form once again. It's the same one like 66.12, same one up here. Sellers broke down, failed, reclaiming back over 66.60. Longs worked to cross off 66.80, and the upper target was set at 67.01. Okay, so right here, breaking above 67.01 triggers a run targeting 67.15, 67.39. So look at this, just ripping. But yeah, the reclaim right here, we crossed off, these targets, and buyers broke out of this range, signaling continuation higher. Okay, and that continuation higher set us up to retest that 4-hour pivot. Okay, so yeah, overall pretty straightforward session. Okay, we did see it on an intraday view. Like, it's important to note these candles. The market broke under 66.12 and reclaimed back over. Okay, what we saw on that 4-hour time frame, look at this. What we're seeing on this 4-hour time frame candle is the market, we gapped down, sellers followed through on it, and then on this candle, we broke inside of this buy zone, and sellers extended down. But remember, we're in the buy zone, and buyers stepped in and pushed the market back over and out of this buy zone. Okay, very straightforward. It's like, that's as easy as it gets. Okay, guys. So basically, we picked up demand, and this put the markets to get back inside of this 4-hour range that we were focused on heading into this week. So for the rest of this week, what we want to look at, and that's what I'm going to be getting into in tonight's newsletter, is we picked up demand and we pushed and got back over 67.18, which essentially has just put the market back inside of this range. So basically, this is as simple as it gets. For the rest of this week, can the market maintain above 67.15, 67.18? And in doing so, it keeps the market inside of this 4-hour range. Okay? And we can see a straight move right back into 6,900. Okay, and we can just be consolidating inside of here. As long as the market can hold above 67.18, we're looking to trade the markets right back inside of this range. Okay, the only time I would be cautious is if we get back under 67.15. That's a risk. That's the risk we're looking at into this week. Getting back under 67.15 puts the buy zone right back into play. All right, so that's what I'm going to be getting into tonight, okay, on this newsletter for Tuesday. But look at this, just ripping. Great session. Absolutely great session. I hope this review has helped, okay, and see what we got into Tuesday.